Okay, we are going to get started for the next segment. So I should just let you know that if you ask a question, because there are no mics out there, I'll have to repeat it, so don't worry. You don't have to identify yourself. Just ask a good question. Just thought I'd say that. Okay, so this next segment, I'm actually going to go through the actual process. So as if we're going to examine you, this is what's going to happen. Okay, so I know people are curious about this if you haven't been examined yet. So this is our examination process, and this is a typical example. Okay, so we send that introductory letter and our questionnaire through our secured portal. And it's only going to be accessible to whoever the NMLS contact is. So if you signed up as a contact, you will get this email. Please don't ignore it, it's not junk mail. So if you set our DFI emails to junk mail, you'll probably never get it. We'll probably be mad if you don't answer in some way. So it's going to come through the that secured email to the contact person. If that contact person changes, we won't know unless NMLS changes. So you need to make sure that that contact person is the person that you want contacted for an exam in NMLS. Okay. And then with that secured portal, we'll send you the letter, and then any information that we want back, you can send back through that same portal. All right. So here are the set of laws, generally, that we're going to examine for. We review for regulatory compliance, and what we mean is we're going to go through your Bank Secrecy Act, anti-money laundering policy, the BSA AML policy. What we're looking for is if you have a policy, and I hope you all have a policy that's required by federal law. If you've done all of the steps, and I'll go through generally what those steps are for the BSA policy. We're going to look at Regulation B, the Equal Credit Opportunity Act, to see whether or not there's any discrimination going on, either overtly, which means that you say in your policy, I don't loan to women, I don't loan to men, I don't loan to seniors, I don't, whatever it is that your policy may or may not say. We haven't seen that for a long time, but recently there was a big enforcement order by the Consumer Finance Protection Bureau that found exactly that. In their loan policy, it said that we do not loan to black women. So, and imagine their surprise. No one ever does that anymore. I mean, there might be a discrimination intent, but no longer do people say in their policy, we do not loan to black women. So that was a big thing for them. So if you have that in your policy, you might want to change it before we get there. So it's not just black women. Just so you know, it's we don't want discrimination in any form. Regulation P, which is the privacy of consumer financial information. So we want to make sure that you provide that privacy policy, you let their customers know how it is that you're using their personally identifiable information. Regulation V, the Fair Credit Reporting Act. How are you using those credit reports? Are you using it for one of the permissible Regulation X, the Real Estate Settlement Procedures Act, also known as RESPA. So we'll see whether or not you're following all of those many rules that have changed in the past few years. Regulation Z, Truth in Lending. This one also has changed. And I'll talk about what CFPB calls the marriage between Regulation X and Regulation Z. For that new form that everybody's talking about, the truth, or the, what do they call it? The TRID. Okay, so we like that too. We also look at our own laws. So, I'm sure, I hope all of you are familiar with Chapter 454F and all of the requirements that we have there. We look to make sure that you have, that your financial condition will allow you to continue to operate. And we look to see if you have any consumer complaints. And if you had consumer complaints, what you did about it. Okay, so that's a lot of laws that we look at. There could be more, but those are typically the ones that we look at. All right, then the examination findings, comments, apparent violations, and observations. Those are all part of the report of examination. So when you get the report of examination, we'll tell you that we went through whatever laws that we went through and reviewed your company on. So we'll name them just like this. And then we'll let you know if there were findings in any one of those regulations. So findings meaning that there were either violations of those regulations or what we call observation. So we're commenting on whatever process or procedure or policy that you might have and how it can be improved. All right, so now you want to know what we're finding, right? Here is the most frequent state violations. 454F 10.5, the authorized place of business. Okay, so there was just a change to the law, but prior to that, this is what we found. The place of business was not open to the public. So you have the place of business, it's on NMLS. If a consumer were to go there, it would not be open for business. Or it is open for business, but because it's a home, you don't want to let anybody in. Also not good. Or you have a place of business, it's in a commercial building, but there's no furniture, or there's no, it's not staffed in any way. You're paying lease rent on an empty piece. Or you have a place that what we call a virtual office. So, you have one of these buildings that you say that I have this place of business, a consumer were to go there, but it's not really the place of business. It's a virtual office. You're renting space when you need it. Okay, that's not the real place of business. Or the last example is that it's not identified on the website. So it is on NMLS. So if we were to look up your name, see where you were, or see your company name, we will find the place of business on NMLS. But consumers typically will go to your website. And if your website does not identify where your place of business is, they'll never find you. Because I don't think too many consumers, even though we publicize it, they don't use NMLS how we would like them to use NMLS. Okay, the next typical place violation is office hours. There are no office hours. So that's kind of a big thing. We went through this a couple years ago. What we're looking for is office hours for companies to have some office hours during regular business hours. Regular business hours are defined in our statute to be 8 to 5, 8 to 4:30, sometime in that range. So, you could open, maybe you have another job that you go to in the mornings. So on Wednesdays and Fridays, you only open from 3:30 to 5:30. Okay, that's fine, because there are some hours during the regular business hours. This does not mean that you have to open 8 to 5 every day. It just means that during regular business hours, you have some availability to the public. So if they wanted to come down, drop off documents, or see what you look like, a lot of consumers want to actually see what you look like. They want to make sure that they're not being scammed in some way. They You want to see that there's a place of business. So that's the purpose of the office hours. Your website or electronic posting of office hours, is not correct. So you say that you're going to be open from 8 to 12 on Tuesday and Thursday. We happen to be in the area, one of our examiners, and we go and visit between 8 and 12, Tuesday, Thursday. You're not there. We might go a couple times during that time period. And if you're never there, we'll ask you if your office hours may be changed, and you need to update your website. So all of this is so that consumers can get a hold of you. They know where you'll be, hopefully, during a certain period of time. And if they have a particular question, especially as it gets closer to closing, they want to make sure that they can find you. I'm just going to say one thing that is acceptable. So a lot of you use email. And in your email, you have your office hours that you're going to be there on certain times of the day, certain days of the week. That is perfectly acceptable. Your schedule changes all of the time, or monthly, or you're going to be on vacation. You just want to say on some communication to your consumers when you are going to be available to them. All right, here's another one. For 54F 17, paren 1, not keeping your website up to date with current MLO contact information. Okay, what does this mean exactly? So especially in bigger companies, people come and go, but you still have their face on your website with their contact information. It's like, oh, we go for an examination. It's like, where are these 10 people that you have on your website? They no longer work for us? We have these other 5 people instead. Well, that's what as I said, that's what consumers are looking at. They're looking at your website to see if they know someone that they want to do business with. They want, they feel like they know you if they see your picture, and they want to do business with you. If that person is no longer with your company, and let's say they do something bad at the other company that they're with, well, guess who's going to get that letter from us? You. Okay, so you want to make sure that if you have your mortgage loan originators up on your website, you keep those current. All right, so those are our 2 most frequent violations. Here are the most frequent federal violations. So we also check for federal laws. So CFPB has delegated part of that authority to the states so that the states can examine the literally thousands, hundreds of thousands of companies. So Bank Secrecy Act, BSA, AML. The policy and procedures are not tailored to your business. So we go, you send us your policies and procedures in the pre-examination packet that we ask for, and your policy is hundreds of pages long. Okay, first off, we know that that's not tailored to your business, because unless you're taking deposits, you're opening CDs, you're wiring money, you have ACH transactions, that 100 pages, which covers all of that, it probably is not going to apply to you. We have a sample of what we will generally see, or what we would like to generally see for MLOCs. We know that your book of business or your business model is pretty narrow. You don't have to talk about deposit products. You don't have to talk about wires. You don't have to talk about ACH, foreign transactions, none of that. If you visit our website, on your MLOC link, MLOC link, you'll see a sample policy. You still want to tailor that to exactly what you do. When we go to your shop and to your company, and we see that you've pulled up our sample policy, it says sample policy on it, we know that you haven't tailored it also. Or we see that, and it's good to share amongst yourselves, and you're borrowing somebody, another MLOC's policy for BSA, if you do that, please remove the other MLOC's name and put your own company name in there so that it looks like it's yours. Okay, this seems simple, but this is what we see. I know you folks are all busy, and so just trying to give you some quick hints. All right, so please tailor your BSA policy to your business. We want to make sure that you have a qualified BSA AML officer. So, that could be the president of the company, could be one of your MLOs, could be anyone. But what we want to see is that that person has actually taken some courses, they know what BSA is all about. If we ask them what BSA stands for, they don't shake their head and go, some sort of regulatory compliance. Okay, wrong answer. You want to immediately spit out, that's for the Bank Secrecy Act. AML is anti-money laundering. Okay, so they need to be qualified. Adequate and ongoing training. So if your company is doing this training online, you want to be sure that you pull down that report so that so that you can prove to us that you folks have taken the training. So it's not good enough to say, oh yeah, we took a training. Maybe some of your banks or lending institutions are letting you come to some of their training. You want to be sure to get a copy of that so that you can prove to us that you've taken that training. We also want to see the handouts or what it is that you got trained on. All right, and then periodic independent testing. So typically what we see is you have a company that gives you or that you buy a BSA AML policy, and then a year later, that same company that you purchased the policy from does an audit on you. That is not independent. And you might wonder why. Because they wrote the policy. So you want somebody else who didn't write that policy to do the audit on the policy and procedures that you had. So this is not meant to cost money. We have seen HUIs of smaller companies kind of banding together, and they do like a round robin exchange. Company A does the independent audit of company B. Company B will do the independent audit for company C, and then company C will do the independent audit of company A. That's perfectly fine. You just want to be sure that if you do that, you of course have a confidentiality agreement between the three companies, and you also want to make sure that you get a report from whoever did your independent review. So when company B does the audit for company C, company B should say, I did an audit, I looked at the policies and procedures, I did one or two independent testing to make sure that the transactions don't violate the policy or the laws. Sign it, and that's it. Oh, the date. Should have put a date on that so we know when that was completed. And that's really all that's needed. So you don't have to spend money or a lot of money to get this done. If you're a bigger company, that round robin, that's not going to work. But smaller companies, that round robin idea, that will work. Okay, no risk assessment. So what we're looking for is a risk assessment. We want to know whether or not your book of business or your business model is more risky or less risky. We have a sample risk assessment on our website also that you can take a look at and use. You can come up with other ways of doing the risk assessment, but what we're looking for is to see whether or not you believe that your customers or the type of loans that you are originating are risky, which may violate either the money laundering laws or the Bank Secrecy Act laws. Okay, here's another one. almost like no loans to black women. Your conversation logs. So I'm glad that you folks are using these conversation logs or emails with your customers. But just a reminder, you can only, for a married couple, where only one spouse is getting the mortgage loan, it's only okay to ask about the spouse if that spouse is financially obligated on the loan. Okay, so what we typically see is, you know, the person who applies maybe doesn't qualify on their own. So we'll see an email saying to the first borrower, can you add your spouse to the loan so that maybe we can get it passed through underwriting? Okay, no, that's a clear violation. What you want to say, let me write this down, is there someone else that you can select to help you qualify for this loan? Typically, that person will ask their spouse, but you don't want to say, have your spouse be part of the loan. Okay, then what we're seeing more frequently now is about domestic partners. Same thing, domestic partners are treated like spouses. Only ask about the domestic partner if they are financially obligated on the loan. So what we've seen is there are forms that you folks are using to ask if people with different last names are in a domestic partnership. It's like, why do you need to know that? I mean, if there's a valid reason, you know, you should share that. But if you're just asking, because that's a form that's spitting out of your loan origination system, you either want to ask your vendor why it is that they want you to fill this out or not give it out. Okay? All right. I should have had this earlier, talking about the 4 pillars of BSA. So the internal controls, which are the policies and procedures. You want to make sure that there is a person known as the BSA officer. There's training for the BSA officer and for staff that's documented, and you do the independent audit. The last thing about this is not a pillar, it will be a pillar, I think, in 2019, customer identification program. So you're asking for information about the customer, their name, the social security number, you know, address, all of that type of information as part of the information that you're collecting for BSA purposes. Okay, so let me stop and see if anybody has a question about either the state violations or federal violations before I go into our observations. Yes?
You know, for the smaller shops.
Yes.
What did you say what the language had to say on the agreement when say if I did yours and you did mine?
Okay, so the question is, what does the agreement need to say for small shops when I was talking about the round robin? So you want to have a confidentiality statement in there saying that, you know, whatever you're reviewing is not, you know, you're not going to share it with anyone else. You're only viewing this information for the audit review purposes. You know, what we want to make sure is you're not stealing somebody else's customers. You know, that's really what it's all about. And then you also want to say in that agreement what it is that you're going to look at. So you're going to look at the policy, the procedure, and you're going to do some transaction testing. And the transaction testing is looking through the loan file and making sure that the information is collected properly and that the proceeds are not going to be used for money laundering purposes. And then when you write the report, you go through the same things. You say the period of time that, you know, you did the review, you looked at the policies, the procedures, and you did transaction testing of, you know, 1 file, 5 files, you know, whatever it is. Typically, We try to do 10% of whatever loan files that you folks might have. You know, I don't expect the independent audit to do that many. One is probably not enough unless you only originate one loan. You know, you want to do it, you know, a couple, 3, 4, just so that you get an idea. Of course, if you find a violation, you should let, you know, that other company know that you think that you might have found something. You know, you can also call us. We're always open to answering questions. Call the licensing branch and they can probably help you. Another question?
On the audits, how often do you just follow our policies and procedures on the audit, or do you have a, you know, as far as what DFI looks at as how often we should be auditing?
Okay, so the question is, how often do these independent audits need to take place? So I'm just going to give you the regulator answer, which is it depends. It depends what your policy says. So if your policy says that you want the independent audit done every year, then get it done every year. You also want to look at your risk assessment. If you are at the low risk, most of our mortgage loan originator companies are at, you know, pretty low risk. You know who your customers are, you know, they're just getting mortgage loans. You know, if the risk is pretty low, you might want to lengthen that time period. You know, maybe 18 months is okay. Maybe 2 years is okay. You know, I don't really know. It depends on what it is that you folks are actually doing as part of your business model. So it could be a year, could be 18 months, could be 2 years. Probably anything longer than 2 years is probably too long, just as a rule of thumb. Okay, there was another question back there.
What's your classification of small shop versus large shop?
Okay, so the question is, how do I define a small shop versus a large shop? So small shops, I think, are either the one person, MLOC, maybe up to 3, 5 people. It's hard to tell exactly how big, how large, small is going to be, just because of, you know, your business model. A small shop where, you know, an MLO originates 20 loans a month. Well, I don't know if I would classify that as a small shop, because you know, the risk of consumer harm is pretty high versus another small shop who only does 1 or 2 loans a month. So it will kind of depend. I'm sorry the answer is not that good, but it will kind of depend on how many loans you originate, how many people are part of that MLOC. Another question? Is there someone? Okay.
I have a question on the question.
Yes.
You know, going back to your exam process, all the Reg B, Reg P,
Yep.
basically that area of examination is based on whether, I guess, we have policies and procedures, and if we're following our policies and procedures.
Yes. So the laundry list of regulations that we look at, that is, you know, typically what we look at during all of our exams. We want to make sure that, and really we're looking at all of those consumer regulations to make sure that there's no consumer harm. So we're looking to see if you, not necessarily if you have a policy for each one of those, but if you have a privacy notice, you know, and if that policy just says we're going to give this privacy notice out with the application package, okay, that's really all you need to say. You know, the ECOA policy, if you deny a loan, you want to make sure that you use the correct regulatory agency so that if consumers have a problem or they want to complain, they know where to complain to. So for all of those, the policies that for each one of those regulatory, or for all of those laws, don't have to be, you know, like what you would see at a bank. It just can be a short statement about what it is, how it is that you're going to provide this. Anything else before we move on to the state by or observations? Okay, there'll be another Q&A at the end. All right, so here are are typical observations. And observations are something that, it violates the law, but it's not as serious, or, some of these are best practices. So the first one is 454F 1.7, which is record retention. So you all know, right? Our record retention in our law says 7 years. So no matter what all the other laws say, BSA, the record retention is 5 years. Our law is much more strict, so you have to follow our law, which is retention of 7 years. The record retention can be paper-based, or it can be electronic documents. So, either one, as long as we can see it, you can call it back up later when you need to. Here's another one, the privacy form, the model privacy form. So the good news is a lot of people are using the model form that CFPB, the Consumer Financial Protection Bureau, has put out. That is really great. The thing about that is you got to fill in part of the form. So you got to put in your name, your company name. There are some fields that are intentionally left blank. So you want to be sure that you're filling out the form. Easily correctable. ECOA. You need to so a lot of people also, they went to the website, they pull up CFPB's model form of the ECOA notice. Again, there are some blanks in there. You need to use the correct federal agency and the correct federal agency address. Don't leave it blank. The address in there is not our address. So within the law there, you'll find the address that you need to put. Again, easily correctable. All right. So typically, as you can see, there are not that many violations, but folks are making the same kind of mistakes across many companies. So once again, questions about any of our observations or violations? How you can address them?
Question, I guess I would classify our company as a small business, so we have our posted hours of business and on the website.
Mm-hmm.
Let's say I break for lunch, I'm taking a customer out for lunch for an hour. And let's say it so happens you come by and I guess you guys let's go take a look at his office and find out that I'm not in there.
Mm-hmm.
So what can I do to say, I guess, not be in violation of not being there when I have my posted office hours?
Okay. So the question is, say you get called away or go to lunch during the posted business hours and we come by. So typically, when we come by and you're not there, that will not necessarily be an instant violation. We might send a letter to you asking, just letting you know, we stopped by for a visit, you weren't there, and then you provide your explanation. We might go again during those posted business hours and see if you're really there. And if you are, we'll just walk in and say hello. But if you're not there again, things get more serious. So the more times we go and visit and you're not there during the posted business hours, probably the more serious of an action we're going to take. So if you're not there one time, probably not a big deal. You might want to respond to the letter that we send you. And that will go through email to the contact person. So if you're not the contact person and they get the letter, they probably want to check around to see why the office wasn't open at that particular time.
So based on what you're saying is that our posted business hours, we should have an idea if we're going to be there, say Monday, Wednesday, Friday from 9 to 2 or from 10 to 2.
Right.
Those are acceptable.
Right. So yeah, posted business hours, Monday, Wednesday, Friday, 9 to 12, Tuesday, Thursday, 1 to 3, whatever it is, that's fine. what we want to do is if we just happen to be in the area, I'm going to say that we don't have staff to go out and visit everybody all the time. But if we happen to be in the area, or conversely, what typically will happen is a consumer will go down there and report to us that they were unable to, visit you. Your doors were locked. There was no sign on the door. And that's when we will do what we call an investigation to see whether or not that was kind of a one-off situation. Maybe you were out sick for the day. I mean, that happens. Or, you're posting hours on the door, but they're not real. So we try to be pretty reasonable about what those office hours look like. And if you're not there, as I said, it's not an instant violation. If you're not there, we go by every day that you have posted business hours, that could work up to a violation. Was there a question back there? No? Okay. All right, so we're going to take another 5-minute break to reset our video. Thank you.